In this video, I'm going to talk about trade exits. If your trade exits are letting you down, stay tuned. Hey traders, a very warm welcome to you. So this is a question that came in. Thank you very much for sending this in. My trade, and actually this is just a perfect question, so good question. My trade exits are letting me down. What can I do about it? Now, the actual question, if I got it on the iPad here, was I have a lot of trouble with my exits. Usually I'm satisfied with my entry, but either I turn a winning trade into a losing trade, or I take profits too soon and miss a lot of the movement. And any recommendations? Okay, so that's a really good question, because it happens to a lot of it. It's happened to me, and it's something that I have to work on constantly. I know traders have to work on it constantly. So let's split it into two categories first. So the first one is, winner turns into a loser. And then we've got taking profits too soon. Now I'm going to split these up because I feel they're two different things. However, mentioned in that question was happy with the entry, it's the exits letting you down. So I'm assuming that actually this is someone who's perhaps a little bit more active, because a winner turning into a loser, probably they're not swing trading, because if they've got 20-30 days of profit, are they holding it for 20-30 days coming all down? Probably not. I'm going to make the assumption, maybe, but I'm going to make the assumption that it's a day trader or 1 or 2 day hold trader who kind of holds a position for a while and sees it unwind and then lets it come back. So the kind of fundamental similarity between these two things is not being in tune with what the market is offering in terms of rotations. So what do I mean by that? So if you've got a market that's kind of rotating up a little bit, backing off, rotating up, down, even in an uptrend, there's going to be natural oscillations where it gets to an extreme point, comes down, gets to an extreme point. You've got your average true range of the day, you've got your kind of morning range, your afternoon range, your weekly range. All these kind of things are moving in and out. Now, if you're trading, and let's say you're trading something that's got, let's say, 100 points ATR in the day, if you're looking for a 100-point target, you're not going to get it unless your entry is exactly at the low or at the high, right? It's just not going to happen very often. Of course, it will happen from time to time, but very often it's not going to happen. So you have to allow for the natural rhythm of the market. Let's say you had a 50-point target. Is that going to happen? Well, you're going to have to look at the chart you're in and you're going to have to say, okay, well, where's the current position? How far have we been already in the range? All these kind of things to work out whether that's a feasible target. Maybe if you're looking for a 15-minute range expansion, what's my feasible target? What do we normally do in this scenario? And something that helped me loads with this, when I was day trading the Dow very actively, I spent a lot of time analyzing how much that market would move during certain hours. So I would say, okay, the opening 15 minutes, the opening 30 minutes, opening hour, closing hour, all that stuff. I would see what the normal, if you like, is probably the incorrect word, most frequently occurring mode range was. And so I knew that that's what I had to kind of adjust my targets for, because I went through a similar problem with this of I would either have my targets too high, and of course you hear people say, hey, you've got to run your winners, you've got to try to look for those big moves, and I get it, but if that's too far based on the natural oscillations, you're never going to get that target. It's going to come back and it's going to be noisy, and unfortunately it's going to turn into a loser from time to time, or you tighten it up too much and then this happens. You take profits too soon because it goes on. So the key is to understanding what the most likely move is after your entry. And you have to do that based on data. You have to say, okay, well, this week on Tuesdays at 1 o'clock till 2 o'clock, or whatever it may be, or from the open, most of the time we move 30 points before we have a meaningful reversal, or we move 10, or we move 5, or whatever it may be. And then either adjusting your position to suit that or not getting involved at all, because you say, hey, actually, we'd have to have an extreme move today. I don't see any signs of that. Normally we're going to rotate up 25, back 10, maybe up 15, back down 30. We're just going to oscillate around. So I'm going to have to be really on the ball to get that. And the chances of me getting that are probably a lot lower than something where we have a lot of range expansion. Let's say you've spotted a double bottom or double top, and then you're involved and you say, hey, well, actually, we have got a good likelihood of us getting the 50 points on this. We have got a good chance of us getting the 25 points because most of the time in this time period, we've done 30-point range. We're starting to push up from the low now. Yes, I will hold it for my full 30 points. So you get the idea. So really, it's understanding the market phase you're in. And if you're in lunchtime, you're trading, you're looking for your 20-point move, and it's not even moving that, you're just not going to get it. And you're going to get frustrated with it because you're trying to force your targets onto the market. Now, I know that I've put that into a similarity, but let's look at these in separate. Even though they're very separate things, there's a similarity there in trying to get in tune or in with the correct phase of the market, or trying to see what the market is doing and then slotting yourself into the ebbs and flows of that. And there's nothing more frustrating than, you know, have a winner that turns into a loser. And of course it's going to happen. It's still going to happen from time to time. So to reduce it, you kind of have to say to yourself, either say, listen, look at my data. What is my data showing me? What is happening to the market? You know, or, take a sample size of as many trades as you can, and you say, okay, when the winner turns into a loser, what is the common theme there? Is it, you said, I mean, in the question, the entry is good. Perhaps the entry is a bit late. Perhaps if your entry is late, you have to reduce that target. You know, why is this happening? Is it coming into a specific time of day where we're getting a lot of rotation? So maybe you're trading the US market and you're holding it to the 4:30 period, then it's coming down because the 4:30 is often a turning time, or midday, that kind of stuff. You know, what's the common parameter or the common theme that runs through when you get that? And then do the same thing for the next batch of trades, is taking profits too soon. Get all the information. This is a bit of a hassle, but if you want to do it, it's worth doing, guys, because get all the data you can for all the trades that you've taken profits too soon, and you'll see patterns. They will be there. You'll see them. You can print out the chart as well. You're going to have the statement there. Annotate on the chart what you've done. Here's my entry. Here's my exit. What has the chart done? And visually, you can thumb through and you can see, hey, look, you know what? Actually, it wasn't really a loser. It was just I pulled my stop up too tight, because that could be the case as well. I pulled my stop up too tight too soon. Well, actually, yeah, I just need to give it more room. Or you know what, maybe because the market conditions at the moment, I need to scale out. You'll start to see it visually, and it's such an important and impactful thing to be doing. Same with taking profits too soon. You know, look at it and you'll say, well, actually, what's the common theme here? The common theme here is I'm getting a really good entry in the morning, absolute bang on entry, and I'm taking my profits, and really I'm just right in the middle of a range expansion. And what are the clues? The clues are, oh, actually we gapped up that morning, or US dollar was, or if you were trading a dollar, for example, you know, the yen was doing this compared to that, and actually it was after we'd had data or a jobs number, or actually it was on a Monday morning when there's a lot of institutions who are just getting involved later in the morning. Whatever, you'll start to see the patterns, and when you start to see the patterns, then you can adjust to suit what you're seeing, and because the evidence is in front of you, you'll say, well, actually, you know what? This little adjustment. If I did this adjustment to all the previous 10, 20, 30 trades, then I would have made X more. Then just make that adjustment moving on. And that's why I think it's so important to be analysing your previous trades. And many people will do a trade, forget about it, move on, and they know what's going wrong. And the question is a great question, because you're obviously self-aware, you know that this is going on, but there's a lot more you can drill down into. There's a lot further process that you can take and say, well, why is that happening? Is it happening under certain conditions? You know, what are the common themes that's making that occur? What are the common themes that's making that occur? And then for the third one, what is the common theme that's giving me, you know, my full target? You know, what's the common theme that's giving me the trade that I want? Getting all that information, then adjusting your trading plan to suit. So that worked really well for me. I've talked about stories about that before, so I won't repeat myself, but just literally flip the switch in the early days for me of analysing my trades and working out exactly, you know, knowing roughly what I'm doing, but working out exactly what I could do of those set period trades that would have made the difference, and then extrapolating that into future trades, and seeing how I get on with that. Anyway, guys, hope you enjoyed the video. If you did, thumbs up, take care, see you in the next one. Good trading. Bye-bye.